I'd like to introduce you to our fourth and final speaker for today, and also for the Living with African Swine Fever special conference, Dr. Rob Musser, nutritionist for NutriQuest from the United States. He's got vast experience in the pig industry in the US and is also involved in technology and nutritional strategies across Europe, the US and Asia. So with pig numbers drastically impacted by ASF and the roll-on effect that this has had across our industry, how do we repopulate? And what technologies are available to help us achieve this?
Thanks a lot, Rex and David and Asia Agribusiness, for the opportunity to come and present some information that I've worked with my colleagues Max Purser and Anna Navarrete to compile for this conference. Throughout this conference, I know you guys have been hearing a lot about from many of the speakers about the disease itself, clinical signs, prevention and spread, and then impact on global meat demand. You know, my focus really today in my presentation will be the market dynamics of ASF in the local market, and the opportunity that opens up for those that remain clear of the disease. So the scope of my presentation in the second slide will really be focused on a quick introduction of NutriQuest, and then talk about large pig production gaps in Asia, which will complement discussions that have been more in depth before, trends and pricings following outbreaks, the risk and reward determination, a potential process to improve the business outcome after an ASF outbreak in your region, and then the value of technologies and how that may shift depending on the situation that you have and the opportunities. So at NutriQuest, just to give you a little background on ourselves, we're a team of industry-leading animal experts serving producers by delivering targeted breakthrough solutions, really aimed at either improving their profitability or improving an important need in their business. And we strive to improve the way that animal producers succeed and flourish by delivering these solutions really built on personal trust and relationships that we've earned over the years. On the next slide, really, it's a graph that one of my colleagues, Max Purser, put together, looking at large pig production gaps in Asia. And so what you're looking at in this graph is a period of time ahead of the first case within a country being reported, and then looking forward at what those market dynamics do. And so Max looked at China, Philippines, and Vietnam. And what he looked at was the price, and this is in US dollars per kg, prior to the break, after the break, and kind of each different period. So if you look at the periods that are outlined as kind of this outbreak phase, which is about a 4-month period afterwards, which in many cases involves destroying animals and different things to maintain biosecurity. And then the next phase is really this first generation of pork that's being raised and when it goes to market. And then the blue arrow really is the first growth post outbreak. So you're out to about a year after the outbreak and then after that. And so if you look across these markets, what you see kind of when you put it on a month, give or take from the confirmed first case, is you see pretty flat prices, ahead of the first outbreak. And then what you see is flat prices, in many cases, through the first phase or first 4 months. In some cases, like in Vietnam, there was a sharp increase and then decrease in pork, but pretty flat. Then you kind of go through a period of time, from months 4 to 7, at least in our work, that says that you see some dips in some cases, because there tends to be a fair bit of pork on there and maybe some concerns around consumption. And then as you work your way out to the 12-month mark, you've ended up exhausting your domestic supplies of frozen pork and other aspects and moved a lot of pigs to market, and the prices really start to rally quite a bit. And so when you look at this component, there's a few things, right? One is these are all pork importing markets or domestic supply, right? They're not export markets. This would look different. The length of time that it may take to get back down to a herd that represents the domestic needs in several markets that have huge export business could take considerably longer. But in these countries where high pork consumption and in a domestic market, this was kind of the trends that we saw. So when you look at these trends, right, there's issues with supply and demand, the movement of pigs, early slaughter below typical weights that ends up taking total pounds off the normal market, movements and ability of breeding stock to be replacement gilts. So in several cases, we know that more commercial gilts have been used to be replacement animals. And then in a closed herd, you get an aging parity profile that it starts to occur with less production. And then you have lots of external factors continuing to play in. So when we look at the risk and reward aspect, what we're going to look at today is just start to outline an approach to consider, when you're in a region that's challenged with ASF to your country. Like I said, there's been some good speakers talking about biosecurity, feed mitigation, and different things. This is going to talk more about the risk and reward areas. So if you look at the market value today versus in the future, so based on what we just kind of showed, a big question is, what's your risk of infection in 6, 12, or 24 months? I think if you looked at the information we just showed in the slide, at 6 months, really, there's not going to be an improvement in markets, but somewhere between 12 to 24, if you can maintain infection-free, you have the ability to potentially get some nice profitability. On this next slide, really, we're just looking at, based on the projected prices over the next 2 to 3 years. And then what we're going to look at is a base on the production cost of $150 or 900 RMB per 100 kg pig. And then we're going to look at the time needed to remain ASF to get a nice return to profitability. So when you look at the risk and reward piece, we've kind of tried to put this into a theoretical situation. When you look at this graph, what you see is, and we used the China situation in dollars and numbers and kind of with the expansion that's going on there. But we kind of looked at it and said, okay, so we know that over time you're going to have an outbreak. You may have a slight dip in prices. And then after about 12 months, supply constraints start to occur, and you raise the price to a point where it's kind of achieved a maximal price. Consumption is just hard at those high prices to maintain, and so you kind of hit a ceiling of what can be paid. And then, what we're seeing in many markets, right, is supply starts to grow. They're trying to expand quickly. Without an ASF vaccine, this is obviously much more challenging. But then at some point we are going to improve supplies, and you're going to see that price for pork, which is the blue line, start to come back down to a more reasonable level that we've been at before. So the interesting thing as you look at this, and we'll get more in depth in this later on, is that when you look at technologies or investments, the ROIs really shift drastically during these times. So when we look at the risk and reward determination, kind of the summary is, review your confidence in maintaining ASF-free state for 12 months in this example. If you don't feel like you can maintain ASF-free, consider what your options are. Determine your cash flow that are needed. In our view is that you at least need $200 per sow losses before some of the profitability starts to build back based on some of these scenarios that we've looked at in the 3 countries shown. And then if you're in a region where the first 12 months has passed, then managing continued investments in biosecurity is very important. So in this next slide, we're going to start to talk about the process to improve your business outcomes. And I broke it into 3 kind of categories. One is maintain lower ASF risk. So we'll talk about that briefly. reduce your cost of production in the first 12 months. The only way that you can minimize cash flow is to watch your cost of production without risking ASF biosecurity issues. And then after that is improving your profitability on pigs starting to be marketed after 12 months. So when it comes to looking at maintaining a lower ASF risk, as several people have talked about, biosecurity of your facilities, biosecurity of your feed, biosecurity of the people that work on the farms, and then the biosecurity of your breeding stock. It may be a time to consider closed herd situations to improve or minimize your risk of bringing it in on animals. So then for me, as I look at the next period of the 12 months after the outbreak, when it comes to it, you'll see not a lot of issues around biosecurity here. What I'm saying is manage your energy level of your diets and feed conversion to really match the profitability of pork production, which will be lower at that point. What's appropriate for that value. Manage your replacement animals carefully. Consider that once you're through the first 12 months, they may be hard to get a hold of, but at the same time, you don't want to risk bringing disease in from replacement animals. And then just review all your costs to make sure that you're competitively priced for your supplies and ingredients. So once you look down the pipeline and you're looking at pigs that in this third kind of phase, which are the improved profitability on pigs being marketed in 12 months. And so really this will start to occur before 12 months. But, you could consider, do we change our pig weights? Do we, work on how do we improve the number of pigs marketed? And then the value of technologies as you move into this more profitable time period. I think the other piece of it is potentially younger pigs could be more valuable sooner. So when you're looking at the weights of pigs and profitability, I know in some markets pigs started to be worth so much that people were willing to sell them at a lighter weight. The other thing you can do to improve pig weight, right, is focus on your amino acids and your energy of your diets, any growth promoters that are allowed, and all for make sure you have adequate pen space for growth, right? Make sure that you are not overcrowding the animals. So the other area is really to improve your number of pigs marketed at 12 months. I think in all these markets that have experienced challenges with ASF, the number of targeted animals to be able to move to food consumption has been very much impacted. And so what can you be doing to change the number of pigs down the road that you're going to be marketing at 12 months? So obviously you could increase your targeted breeds. You could be looking at the number of sows that you're breeding every month, and can you push those forward faster? Obviously crates can be a limiting factor, or maternity pens, depending on your region. And then the second one is, a big one, and we'll talk more about it in our post-conference session too, is improvement in embryo mortality. If you really consider from fertilization to market, 70% of the loss of the potential pigs is in the embryonic mortality phase. So you'll lose 30 to 40% of the embryos during embryonic development due to mortality for a few different reasons. But we'll explore that more. So please join us later on for our session looking at embryo mortality. The third area really is use of technologies to reduce birth to market mortality. So obviously once you have these pigs on the ground, doing what you can and looking at how you invest to keep those pigs in the system for a longer period. And then we'll move to valuing technology at a new return level. So I think the one thing that we're going to try to outline that I think is an insight, that we can deliver here that's different than some of the speakers have given yet is consideration of a more rapid or larger evaluation of technologies to ensure that you get the highest return during these times of industry recovery of supply. So I think we all know that there's going to be periods where profitability is better for a while, and at some point we will adjust supply and it'll at best return to normal levels. So. So as we look at how to value technologies, this is kind of how we've tried to visualize what we're talking about. So we've showed this graph before with the blue lines and the dots that show the market price, and in this case it's an RMB per kg, so it follows very similar to the Chinese hog prices. And we're representing in this case 100,000 sow system as an example. But the normal situation that we find most producers, especially throughout Asia, follow is a pretty stepwise process where you look at a technology and you decide if it has value, and you start a small sow study within a farm. And then once that trial is done in 8 to 12 months, then you say, okay, now we're going to start a small 3 to 5 sow farm study, and we're going to look at that. And so the same thing, 9 to 12 months. And then you start a regional study, with maybe 10 or more farms. So it may be a division or an area where you can control the feed mill on a lot of farms, and you look for similar improvements, and then you implement it in your system if that turns out positive. And so we've kind of broken these categories into these different colors so that you can consider, as you look at what was normally, let's say, a 4-to-1 return on investment target, in normal pricing, when pork prices are 18 RMB per kg or less, all of a sudden raised to 10-to-1, 18-to-1, and 25-to-1. So you see these big improvements in profitability as the pork prices continued to climb. And so if you look at it and you say during this beginning period, we're going to run the small study, we tried to represent the financial impact of doing that. And so if you look at that, you're going to miss out on some of the period of highest profitability as you try to validate that small research project. And then you move through the second step, you move through the third step, and then in this scenario, really at that period of about 40 months, you've decided it showed value, and now you implement it system wide. And you see profitability at that point starts to come down because everybody's in a similar boat with improvement in production rates. So if that happened to be this scenario that played out, which is, this is theoretical, I think most people agree with the shape of the curve, whether or not the timing is spot on, I think is hard to know. But if you look at the profitability in this case for a 100,000 sow system that implemented a technology through these 4-step process, then their period from 40 to 72 months is about 100 million RMB in profit in this scenario. So then what we'd propose is, what if you even just considered not running these processes in stepwise, or not running all 3 of these or all 4 of these processes? So in this example, during these high times of profitability, what if you said we're going to do a small study, then we're going to move to a larger series of 3 to 5 farms, and then we're going to implement, because it should represent enough, and with the higher return on investment, our risk profile is quite a bit different. So in this scenario, when you look through these processes that have been run through, what you see is, you still have kind of the same shape with the first 2 parts, but the implementation takes you from 100 million RMB to 190 million RMB. So just looking at taking out one of those processes in this scenario improves your profitability by 90 million RMB, or about $15 million. The other thing to consider is, what if you limited 2 of your processes out before you used it? So in many cases, you run the small study because that's the most impactful study, and then you move to larger scales because you're trying to demonstrate this to other operational advisors in the business. But one thing to consider is, if you ran one stage, you could improve your profitability from the 4-step process at 100 million RMB to 265 million RMB. The other thing to consider is, it doesn't have to be 2 steps removed. It could just be that multiple steps are actually being done at the same time. So I think that's something to consider. I think most people would still have the process to go from a small sow study to a large scale study. And so I think there's still that opportunity. But if you believe that the return on investment in this example, 25 to 1, it means, do you believe that their information is within 4% accurate to really deliver that? And if so, the profitability to take that risk for the potential reward on a large scale study while you're doing a small study is pretty valuable. And then I do think there's consideration to be had that, if implemented based on external knowledge and research and advisors, right? We don't have to repeat everything that's done in the process, but if you can work through with your advisors that from other companies or from consulting groups or universities, government organizations where they show value, the ability to just go ahead and implement a technology back to the same thing, if it's a 25 to 1 return on investment over the course of the next 30 to 40 months, how wrong could you be in that scenario to start to evaluate it and set some expectations of what you would like to see confirmational data out of it. Work with the technology company, whether it's equipment or feed ingredients or vaccines or other health components, to do some tracking of performance and those things, which I know can be challenging when parity shifts and those things occur at the farm. But that's really what we wanted to, the value, how to value technologies is one of the things we really wanted to kind of outline here. So as we look at it, it's really comparing your choices over the next 6 years. And like I said, it's based on 100,000 cell systems, so you can scale that up and down depending on your size of your operation. But your normal process, it would say that if it follows the curve that we'd show, it's about 100 million, but 107 million RMB, or about $16.5 million US dollars in profitability. Removing one of those steps alone, so go into 3 steps in that process, and maybe simultaneously doing a couple, allows you to improve your profitability almost by double, up to 29 million US dollars. And then if you could get it down to a validation study and then implementation, the potential is to take it to 41 million US dollars in profitability. And then implement really based on external data. I think there's a few considerations. It's not just, that you might look at that and say, well, for 2 million difference in US dollars, per, in these examples, is it worth, why would you not run the small study? I think the other component is research takes effort, right? And in the middle of a disease challenge in your industry, effort is needed in many ways. So I think just consider, would you ever implement it, and what would you need to implement it based on external data? For me as an example, if somebody said I need you to implement something based on our data or others' comments without running your own work, then I'd want to kind of be able to get a list of, okay, well, maybe who are some of the technical advisors we can ask their opinions on. Obviously we get asked this question too, is, can you share different experiences from other operations? How as they try to work down their process and help the decision maker, the people that you're working through in this process, for whatever technology it is, help them put together the pieces to be able to present it to leadership, so that they can have an easier time moving the process ahead internally. So in summary, really it's biosecurity, take charge and stay clear. Understand where this is going in terms of market prices and the factors that may impact it. Think about the charts we shared, think about the information, determine, when will we run out of domestic supplies, and are we an export market or an import market, because those for sure change the dynamics quickly. Keep an eye on the market and be ready to shift gears as the disease and the market dynamics play out. And I think that's a key part, is just, don't lock yourself into a process at any point. Stay flexible, keep listening, be able to manage, either save money and reduce your cost of production when that's appropriate, but be ready to gear up production when profitability is on the horizon. if you don't evaluate what is well understood is another way to think about what we described in the how do you value technologies. As an example, if I said you're going to try to reduce your cost of production by dropping your lysine, or if later on you wanted to improve your production by increasing lysine and amino acid ratios, do you really need to research that in your own farm? I think we'd all say no. Between the genetic suppliers and the universities, it's pretty well known, or past work you've already done. You don't need to revalidate that. I think consider that for other technologies as well, right? Are you going to be able to, and I'll pick on a feed mitigant, do adequate feed mitigation research within your own facility, or are you going to have to rely on the suppliers that bring those technologies forward? So that's the big components of this presentation. Like I said, lots of good presenters on the disease, the clinical signs, the prevention of spread, the global meat demand. Max and I's purpose of this presentation really was just to be able to have you start to think about what are my local economics and how do I manage the ups and downs of those changes over what appears to be somewhat predictable pricing scenarios through the first couple years, and to give you a perspective of how do you value technologies, given that there probably is this trend to at some point we saturate the markets and prices plateau, to then a future point that we start to meet supply or oversupply for that price, and the prices come back down. And so I think just keeping your head on the swivel is what we always say in the U.S. of looking out for changes that are coming. And feel free to reach out to us at NutriQuest, and for any questions you may have about this. Look forward to joining us in the post-conference session. We'll talk a little bit more about embryonic survivability and how that can really impact your profitability. And feel free to send me an email. So at rob@nutriquest.com. Rex and David, thank you very much for this opportunity. And Max and Anna, thanks for you guys' collaboration in this presentation. And I hope everybody continues to manage their business as well through these ASF challenges, and keeps pork production on a global stage in the right position. Thank you very much.